All right. Again, sorry for the delay with the slides being uploaded. I know we're starting a little bit late, so we'll get right to it. Thank you very much for attending today. As it's coming up at the end of the year, people looking at monies that you have, doing some tax planning, and a good question to ask yourself is what to do with an old 401k. Maybe you change jobs and you have an old one that you're looking to use in an IRA, or you just have had one for years and you're not really sure what to do with it. So we'll cover that. We'll cover self-directed IRAs, choosing the right plan, a few case studies, good basis for you to get some good information on self-direction and how to use an old 401k to gain a lot more control in that aspect. A little bit about myself. My name is Alex Perney. I'm a certified IRA services professional with the American Banking Association. I've been with Advanta since 2012. I started doing investments for this company. I worked on the side of account management and actually doing the transactions and the maintenance and the actual money side of things with our accounts. So that's where I have my basis and my experience with this. So I can answer certainly any of your questions with regards to old 401ks, how to invest with an IRA or even a self-directed 401k. So please don't hesitate to ask me any questions, even if they may fall a little bit out of the purview of just using an old 401k or your self-directed IRA. I can certainly get a handle and answer those for you. A disclaimer before we get really into the nuts and bolts of this presentation. Advanta IRA and our employees, we do not provide any tax, legal, or investment advice or endorse any investment products. All information that we are presenting here today is for informational purposes only. All parties are encouraged to consult with their attorneys, accountants, and financial advisors before entering into any type of investment. So please just make sure that before you do anything, you just check with the people that are advising you personally as well. We can help answer the broad stroke questions and the concepts and the basic IRS and IRA guidelines. But when it comes down ultimately whether or not that the investment is a good fit for you, that determination does need to be made outside of Advanta. A little bit of an agenda for today. We're going to define self-directed IRAs. We're going to give you a little bit of background about Advanta IRA. We're going to be utilizing what to do with the old 401k as it relates to choosing the right type of self-directed plan. Also go through some investment options and case studies at the end of it, so you will get a little bit of practical knowledge on how these concepts can be applied with regards to your old 401k funds. Most people want to look at the self-directed IRA as something that is inherently completely different from any other type of IRA out there. In reality, a self-directed IRA in its DNA is the exact same as any other IRA that you have. The difference in a self-directed IRA is that you hold the control. You maintain the actual hands-on utilization of those funds to do exactly what you want to and not be forced into something that is just offered by your investment provider or just offered by your custodian. With a self-directed IRA, you can use your old 401k funds in that IRA to buy and acquire real estate, to potentially lend out mortgages, to do other types of futures trading potentially, and many other options. So the term self-direction is just a reference to the type of investing you can do. This IRA still maintains all of the exact same great tax qualifications as your 401k does as far as being tax deferred. You get all of the same great benefits of not having to pay penalties or taxes such as capital gains or ordinary income at the time of your investment. So just with a little bit of background of defining what the self-directed IRA is can really kind of help people that are maybe new to this and looking to do something with their previous employer's funds or maybe an old IRA or what have you, a little bit better handle on exactly what self-direction is. A little bit about us as a company. Advanta IRA has been in operation since 2004. We have been located here in the Tampa Bay area since then. We made 20 plus years of industry experience with our employees with self-direction. We are very trusted within our network. We maintain and manage over $700 million in assets for our clients and partners, which is actually a little bit higher. I haven't updated it recently, but with the growth of our company, I think we're closer to about 750. And the nice thing about the service that we offer for you is that because we don't offer or endorse any products, we have to help educate and be really available to our clients. So we have a dedicated account management program for you in order to let's see. Some people seem to not be hearing any sound. If you cannot hear anything, you do have to dial in, either use your computer or dial in with the phone. I do see that we have 19 people on audio, but 21 people in the presentation portion of it. So you do have to dial in. There's a prompt on the right-hand side with a number to call, and the 581-9853 is the dial in. So if you just make sure you dial in if you need the audio, it will be recorded as well. But we do offer a dedicated account management program. So you do have the ability to go to a single person with everything that you need for your account. They are going to be your single point of contact in helping you in making sure that everything is done correctly and that your accomplishments with the investments you're looking at are being taken care of and done in a timely manner. Let me just type into the chat. There seems to be one person that cannot hear, or I think they might be logging back in. Okay. So the process of getting started with doing this kind of thing is very simple. The first step in doing this type of investing is opening an account. The second portion would be to take that old 401k or IRA that you have that may have been sitting there not really doing anything for you, and then moving those funds via a direct transfer or rollover into your IRA, which is not a taxable event. You don't pay any penalties or anything else like that. And then you start your self-directed IRA investing. So going in the broad spectrum of things like trusts and LLCs to real estate and private lending. All right, thanks. Looks like we got the audio issue figured out. And then you can start investing in a self-directed fashion. So it's a very simple process. The process for getting started inherently is very non-complicated and pretty streamlined. So the biggest barrier that most people think of when they look at their old 401k or some old money that they have might just be, how do I get started with this? And it really is a simple process. And it's made even simpler by the fact that we are, very invested in making sure that we are available to you with our dedicated account management and the availability of all of our staff to help answer your questions, whether it's myself or anyone else in our business development or people in operations. We want to make this as easy as the process as possible. And the other side of that coin is going to be the education aspect of it. It's easy enough to say, hey, here's how you get started with doing something with your old 401k, but once you get it here, what do you do with it? How do you make those decisions? We maintain an up-to-date learning center on our website, and this is actually a part of that whole realm of our learning center, in that we hold seminars and webinars that are always going to be free to you to attend, so that way you can get the good information to help you make the informed choice and truly take control of your investments and your strategies. We have an on-demand service, so this webinar that you're attending right now is being recorded, and I will also be putting up these slides on our YouTube channel. So if you want to get something, or if you're taking notes, you didn't get a chance to ask a question, go to our YouTube channel. It'll be uploaded by tomorrow. You can get those things written down. Give us a call, give me a call, and we can get those questions answered. And we also update an industry blog. So if you're curious to know what's happening in the realm of IRAs or retirement investments in general, get on our blog. We put things on there that are going to be coming out of the IRS, that are coming out of other investors or other trends in the marketplace. So utilize what we have out there for you. It can really help to make the most informed decision possible. All right, we have a question. I'm just going to jump into that. Corey asks, can the money be put in stocks and mutual funds while I look for real estate investments to invest in? Good question. Just like Fidelity is a specialized firm that does stocks and bonds, but won't do real estate, Advanta, you cannot necessarily buy stocks and mutual funds on our platform because we're set up for doing things like real estate and other investments. But you can maintain more than one IRA. So if you open up your IRA, fund it with enough money to do a security deposit to get something under contract, maybe $5,000 or so, you can act quickly and get something under escrow and then just transfer the money from the other account. So you don't necessarily have to have your money parked over here not doing anything for. If you want to keep it invested in stocks and mutual funds, you can move just a small amount over to get started, get a property under contract, and then move the rest over once you've identified something. So great question, Corey. And let me just flag that so that way we can get that on the ledger for you and answered. Okay, so please do keep the questions coming. Oh, we have another one. Karen asked, does a tax-sheltered annuity account work for transfers to a self-directed plan? The answer to that is it can, depending on the type of tax-sheltered annuity that you are utilizing, and you will need to check with the annuity provider, whomever that may be, to see if they are maintaining that as what's deemed a rollover qualified tax shelter. If it is a rollover qualified tax shelter, you can move that money without a tax or penalty hit to an IRA, but that really all depends on the type of product that they have you in and how they're doing the accounting for that. So you would just need to check with the provider of that annuity that you hold to see whether or not you can move it into an IRA. You can conversely ask them one of two questions, whether it is rollover qualified or just if you can move the funds after you have claimed the annuity into an IRA. Both of those questions, if either one is yes, then you can certainly move that into a self-directed IRA plan. Okay. And please do, since we are, talking about IRAs here, if you do get a question, just give us a call, set up a consultation. We're happy to talk to you. The consultation's free. We're not going to charge you like a CPA or an attorney is. And the good thing is, use that consultation to kind of get to the point that you know where you need to go to with getting those people that do charge you for your money. So if you do have questions, give us a call and we can help you get to the right answers first. So instead of spending an hour of an attorney's time to get to an hour of them answering your questions, give us a call, spend an hour of our time for free, get the questions on the table that you need to ask, and then give them a call and save yourself some money. Now, the big thing is when it comes to this is that you have options. So with options comes a lot of choices to be made. Now, if you have an old 401k, chances are that it's what's called a deductible contribution plan, meaning that when you put money into that plan, you got a tax deduction. Now, if that is the case, then the money from that old 401k can be moved directly into a traditional IRA. It maintains the same kind of tax qualification with having tax-deferred investing, so you're not paying any taxes at the time of the investment, whether it's a buy, sell, or growth. The only time you pay taxes in that plan is when you take money out personally. If you want to use it for retirement or to take a vacation or something like that, that's when you get taxed on that money. So 9 times out, or I shouldn't be using that kind of ratio, but for the most part, when you have an old 401k, it goes all directly into a traditional IRA. In some instances, some employers will allow you to make a non-deductible contribution into your 401k. That's what's called a Roth 401k. The Roth plan is really popular, and a lot of people that are familiar with it know that the Roth plan allows for tax-free growth, complete tax-free growth within an IRA. So in an IRA, and the tax qualifications are going to be the same as if you have a Roth 401k, is that that money grows tax-free and then is distributed tax-free as well, because you've already paid taxes on the money. You get no deduction for putting it in, but you get tax-free distributions at the age of retirement. Now, with a Roth 401k, the 401k portion that is going to be Roth will only be what you added into it as an elective deferral. So what you put into that plan as a deferral from your paycheck can potentially be made as a non-deductible Roth contribution into that 401k plan. The elective deferral, the profit sharing match from your employer is always going to be a traditional type contribution. So in some instances, you might actually have 2 401ks with the same employer, one being a Roth portion, the other being traditional portion as well. Now, there are other types of plans out there that you might be able to move an old employer plan to, depending on what you're doing. Now, let's say you're a self-employed individual and you want to maintain the ability to have higher contribution limits and be able to put money away at a higher pace than just utilizing a regular traditional or Roth IRA. You could potentially establish a SEP, which is a simplified employer pension, a SIMPLE, which is a savings incentive match for employers and employees, or an individual 401k. So if you have an individual business, or if you are a sole proprietor operating a subchapter S or an LLC, you can establish your own 401k plan, and we can administer that in a self-directed fashion for you. And that goes with any of the type of plans that are up on the screen right here. So choosing the right type of plan comes down a lot to what type of plan you originally had with your old employer. It also comes down to, what your strategy is for investing and whether or not you maybe need to have something that's a little bit more robust with regards to how much you can contribute to it, and all those kind of determinations can be made with your CPA. So figuring out exactly what you're going to be doing as far as your income is concerned, if you're self-employed, certainly, maybe looking at an individual 401k plan. If you're in your own business, the SEP or the simple IRA might be a great option too for those old funds that you have to go into, and also maintaining a very high level of contribution limits for those. The SEP, the simple, and the individual 401k are all roughly about $53,000. The individual 401k having a caveat for individuals over the age of 50 and a half for an additional $6,000 of contribution. So you really do have a lot of more money that you can potentially max out those plans at, as opposed to the traditional and the Roth IRAs, which are both capped at $5,500 or $6,500 depending on your age. Now, those are just numbers with regards to how much you can take out of your paycheck potentially and put into that. That does not limit you on how much money you can roll over or transfer from another like type of account. It also is no limit on earnings. So any of the earnings with any of these type of plans are not going to be capped at any of those types of numbers. That's simply just what you can take out of your personal paycheck and put in there on an annual basis. So it's a good thing to keep in mind that just because you have those numbers as limitations is not necessarily something that's going to limit you at all with regards to your earnings or your investments. The last two types of plans that we do offer, it doesn't necessarily go so well into what you do with your old 401k, but if you are interested in setting up either an education savings account or Coverdell account for qualifying educational expenses and want to self-direct that, we can handle that. Also, if you have a qualifying high deductible health plan, so a high deductible health insurance plan, you can establish an HSA as well. The contribution limits for those two is $2,000 per beneficiary per year on an education savings account, and the health savings account is either going to be $3,750 for individual plan, or a family plan is $3,000 more of $6,750. So with that said, those are your plan options. It really kind of comes down to needing to get with a CPA, or really kind of just giving us a call and giving us the idea of what you have, where it is, what you're looking to invest in, and what you want to accomplish. And we can pretty much get you the best information possible as to which plan might make the most sense for you to take to your CPA and make the best decision with. Now, with regards to choosing the right plan, that's all well and good, but the ultimate goal of having a self-directed IRA is the huge amount of different types of investments that you can potentially do with that plan. So your options certainly are not limited to what is on this screen. There is a myriad of different types of things that you can choose from. The primary basis of what we do here at Advanta is real estate and real estate-centric type investments. Roughly about 70% of our clients do some sort of real estate investing with their IRA or individual 401k if that's the plan that they are choosing to utilize with us. Real estate in itself is a very common, very well-known investment. The clients will either utilize their IRA to purchase a piece of real estate outright for either rental income, so the rental income would flow directly back to the IRA, being tax deferred and tax exempt at the time of the investment, so you're not paying any taxes on that real estate rental income, and it just goes right back into your IRA just like a stock dividend would if you were at Fidelity or somewhere else. Conversely, you could also do a fix and flip, so buying a piece of real estate, fixing it up, and selling it for a profit. The nice thing about that is you're going to be exempt from any sort of capital gains on that, and you're going to have more capital quicker to get invested in bigger projects. The other portion of real estate, instead of buying something outright, people need money to buy real estate. It's a very high dollar investment. So maybe instead of wanting to hold real estate directly in your IRA, people would like to lend someone a note and mortgage out of their IRA. So their IRA becomes the lien holder, becomes the bank in this instance for someone else to go buy the property. The great thing about that is you get to choose your rate of return. You get to choose what's acceptable and what makes sense for that market and who's going to be borrowing from you. So you get to choose the interest rate, you get to choose the down payment and work with the person, and then you collect principal and interest or interest only or whatever other agreement you've made with that person as to what the repayment of that loan back to your IRA is going to be. In some instances, people will form trusts or LLCs underneath of their IRA to do the real estate investing, as what the single member LLC is. We'll get into a little bit of a case study with that at the end, but keep in mind that that might be a little bit of a more advanced strategy for the person starting out with self-directing their IRA. Private placements and private stock, because the exchange markets such as the New York Stock Exchange and the NASDAQ only will list stocks that are publicly traded. Companies that are not that want to offer stock for people to purchase and hold with their companies have to sell it on private markets. Now, if you'd like to utilize your IRA to hold some of that, whether it's a startup or maybe a private bank or something like that, you can actually use your self-directed IRA to buy and hold that, because people like Merrill Lynch and Fidelity are not going to let you hold an unregistered security in your IRA. Whereas with Advanta, you can certainly use your IRA to invest in an accredited investor limited partnership or something that's not publicly traded, because you are making that decision for your IRA, and we are helping you facilitate making sure that it is done correctly and properly titled within your account itself, because it's their business decision ultimately as to them not allowing you to do those types of investments. So being able to self-direct and take control, we can make those kind of things happen for you. The last two being futures and Forex. People that utilize these types of investment strategies typically are very specific on that. So if you wanted to take your old 401k and invest in currencies, so betting that one currency will go up in relation to the US dollar or down, you can do that kind of thing within a self-directed IRA. And we can certainly kind of jump into that in more detail if you have questions, but that's kind of a completely different topic apart from what we're doing now. So before we get into the case studies and how to get started with that, I want to kind of open it up for any questions that people might have now. I'm going to take a quick sip of water, but if anyone has one, please take a minute or two, type it in there, and let's get some questions out there if you have any. All right. So if we don't have any questions, let's jump in. Oh. Okay, Karen has a question. She asked, share the fix and flip part again. She didn't quite hear it. So if anyone else had a problem hearing that portion of it, instead, let me just go back a slide. So with real estate, there's two main strategies that a lot of our clients use for when they buy it directly in their IRA, meaning their IRA goes and buys 123 Main Street for its investment. One of them will be to rent it out. So the account holder would find a tenant. The tenant would pay pursuant to a lease agreement back to the IRA, rent each month for using the property. The other portion of that, fix and flip or do a rehab of the property, where the strategy would be to buy a property cheaply, put money out of the IRA into fixing it up, and then selling it for a profit. So all of the profit from that fix and flip of the property would go directly back into the IRA. It would be not taxable at that time. You would completely avoid any capital gains tax, and you wouldn't be paying any ordinary income either. So you would potentially be getting much more capital to use at a quicker rate than if you were doing this investing personally. So that's really the impetus behind the fix and flip within the IRA. So thanks, Karen, for asking me to go back to that. Here's the agenda. So now getting started. So since Advanta does not provide you with a list of things to buy or purchase within an IRA, how do you find the deals? Since you're not picking stocks off of a spreadsheet and you're not looking at it that way, how do you find what you're going to be purchasing? The biggest thing that I can tell people is use your network. If you have built professionally a network of people that you do real estate investing with or other types of investing that would be a good fit for your IRA, use that personal network and experience that you have outside of your IRA to help you make informed decisions and good investments within your IRA. Because with self-direction, you're not only being able to invest in what you know, but who you know as well. So if you know a bunch about real estate and you want to go out there and make that what's going to be securing your retirement, by all means, we offer a platform to do that. And conversely, if you know a ton about lending someone money and you can always pick out a good borrower and make good terms and have done very well on that personally, you don't necessarily have to reinvent the wheel and do something that you're not familiar with. If you're not familiar with doing a rental property, maybe it's not the best time to start within your IRA. You can certainly use your personal experience as a lender to translate that with regard to the investing you're doing in the IRA. Okay, Cheryl asked a question. It's a good time as any to answer it. I have a 401k plan with my employer, and I am a total beginner on this and investing. Where do I go to open a Roth IRA that I want to have totally separate from my employer's 401k plan? The answer is to that, I mean, we can certainly help you establish a Roth IRA. It's as easy as just completing our account application and making an election as to how you would like to fund it. More than happy to get into that. It's kind of a at-length discussion, if you will, that I'm more than happy to have with you. I'll put my contact information up at the end of the presentation, so feel free to reach out to me, give me a call, or shoot me an email, and we can kind of start that conversation. Cheryl, happy to do that with you. And just to give everyone an agenda. We are open till 5 o'clock today, 5 o'clock tomorrow, and we'll be closing at 12 on Friday, and we will be observing the federal holiday on Monday, and we'll be closed for New Year's Day on Monday. But after that, regular 8:30 to 5 will be open after that for the remainder of the year. So just to give everyone an idea, if you have questions, that's our schedule coming up. So buying real estate, as going back as to rental, flips, etc., how it works. So people may be familiar with buying a piece of stock in an IRA. You go to your platform, you click buy, it shows up. That's pretty much the extent of most people's experience with that. But how does it work in a self-directed IRA? So as I mentioned before, you have a dedicated account manager. That account manager will be working with you to make sure everything is done correctly with regards to any type of investing that you're doing, insofar to make sure that it is properly titled and funded within the IRA. So in this instance, if you're purchasing a piece of property, the property is going to be purchased in the name of the IRA. The name on the contract and the deed and all the other closing documents would be Advanta IRA, FBO for benefit of John Smith IRA and the IRA number. That's how the property is held. That's how all of the income and expenses are paid in and out, and who is going to be on the deed when it gets sold as well. So keep in mind, all of the rental income, all of the sale equity, and anything else like that is going to be coming back into the IRA tax-free, and that's tax exemption from capital gains, ordinary income, or anything else that might potentially be levied on that investment at the time it's done. You're doing this all in a tax-exempt entity that will in turn only be taxed potentially when you take money out. So you get more money quicker, and the case study number 1 that I'd like to illustrate to you really shows how you can get a lot more equity involved in deals quicker than you would be able to outside of your IRA. And this is examples that I've taken from what clients have done. Again, this is not any sort of indication of guarantee of return, but it's just a good illustration of, how a real estate deal that a client of mine has done works. So the numbers are just utilized to illustrate a point, but I think it really does kind of get the point across of how powerful this is when you don't have to worry about certain types of taxes in your investing. So John Smith identified a property being sold as a short sale from a bank. Short sale meaning that the bank's agreeing to sell it at a loss to cover the expenses of the loan that is either a default or some other issues with the loan. He had an offer accepted at $120,000. And just as on the previous slide, the deal is closed and funded within the IRA. So the IRA takes complete title to the property. Advanta IRA, FBO, John Smith IRA is the owner of the property. He goes and finds a tenant to rent the property to. He rents it for $1,200 a month for 2 years, so that nets him $82,000 of rental income. Now, obviously, there's a few expenses. He has to pay taxes, but $28,000, just for a rough number, is what he made in 2 years on just renting that property out. In 2 years, he sold the property for $170,000. So that's $50,000 of profit from the $120,000 that he purchased it for. No taxes, as in capital gains or ordinary income. The only taxes that potentially would be applicable would just be the property taxes, so nothing regarding the investment to the IRA itself. And we have a good question from Corey I'll get to in one moment. So the total in profit of the $78,800 is completely profit to his IRA. He doesn't have to worry about paying capital gains or carving out a certain amount to pay for taxes. It's all ready to go for the next deal. Corey asked, if John spends $10,000 in renovations, can that money come from the IRA? The answer to that is it has to come from the IRA. If the IRA owns 100% of the property and it needs renovations or improvements or repairs, that money has to come from the IRA. So making sure that you have enough in the IRA to cover any potential expenses is something that you really do need to look at. So in this instance, if the property was accepted at 120 and needed 10,000 worth of work, John probably would need to make sure that he had about 130 in the IRA to make sure that he had a good buffer to pay for any expenses that come up with the property. So Corey, great question. So this is a good example of two portions of a real estate strategy, one being to rent the property out, and two, to sell it for an appreciable value. The old adage of buy low, sell high applies here. He bought it for 120, sold it for 150, made $30,000 of profit on the sale, and also $28,000 in profit from the rental of the property as well. And again, remember, you're not having to carve out or escrow any sort of taxes from this, because it's all being done within the IRA, and nothing's having to be paid at that time. Now, the other side of it that we touched on earlier is acting as the bank. You do not necessarily have to, in real estate, buy the real estate outright. If you want to utilize your old 401k to invest in real estate, you can act as the bank and lend someone the money and choose your rate of return and choose the terms that are applicable, whether it's points up front and a lower interest rate or a higher interest rate with less points. You can really kind of create the deal that makes the most sense for you and the person you're doing it with. So there is no one prescribed way to do this. The thing that works the best for you is going to be different from the thing that works the best for someone else. So what we have up here is a couple different ways of utilizing your IRA to invest in lending. So taking that old 401k and moving it to an IRA and then lending money out. The most traditional type of loan that people are going to be familiar with is the mortgage. Just like on your personal residence where you borrowed money to buy the property because you didn't have the money cash, instead of you going to Wells Fargo to borrow money, your IRA is acting as Wells Fargo in this instance. So you lend the investor the money for the property that they're looking to purchase, and then they make payments of principal and interest back to your IRA. However, lending doesn't have to necessarily be secured by a piece of real estate. You don't have to have a mortgage in your IRA's name. You can just have a promissory note. So if you know someone that is a contractor, someone that works on properties, and maybe they need some money to finish a project, or maybe they are short on payroll and they need to borrow money, your IRA can act as an unsecured lender as well. One more trending type of lending that people have seemed to be doing with their IRAs lately has been what's called equity participation. So instead of getting principal and interest payments back to the IRA, the note is written as such as that instead of a fixed rate of return, the IRA will receive a certain portion of the profits, the sale of the property, plus the principal they lent out. So if they lend someone $50,000, they say, instead of paying me 6% interest, pay me 10% of the proceeds of the profits of the property over the $50,000 you owe me. So there's a bunch of different ways to get involved with it. I put wrap loan up there because if there is anyone attending that is, does a lot of loans or maybe does a little bit more of the advanced type of lending, that is certainly an available strategy to utilize for that. I'm not going to get too far into that because equity participation typically makes people scratch their head enough. So these are the four types of lending that can happen in an IRA, not the only ones, but certainly kind of touches on the most basic to the most advanced type of strategies that our clients have used for their IRAs. So here is an example of equity participation and utilizing mortgage lending within an IRA. One of the largest accounts at Advanta only does lending. So this is certainly something that people have had great success with. Sam has a network of investors in Florida that do investing in fix and flips. The Roth IRA acts as the lender to these people, and all the loans are secured by a first mortgage. All interest and payoffs are not taxable at all, and all personal distributions are made tax-free. So everything coming back to the IRA is not taxed. Principal, interest, not taxed. Since it is a Roth IRA, anything that's taken out of the account by the account holder is tax-free as well. So no taxes are ever paid on this. So that really kind of illustrates, the power of the Roth IRA to help you avoid taxes on a personal basis as well. So you're never having to pay any sort of personal tax as well because you've already paid the tax on the initial seed that you planted with the Roth IRA. Now, equity participation, a pretty interesting concept. So if people haven't heard about it, well, that's why I like to put up a slide to help illustrate it. Jane and Andy know a contractor that flips properties. From their IRAs, they lend 50-50 on each note for each rehab that the contractor is doing. Instead of getting interest, they write a note so that their respective IRAs get 30% of the profits of the sale. So each IRA receives back the principal when the property sells, plus 30% of the profits. Okay, Keith asked a great question. If people don't pay you back, will you get a tax bill and for the lost money? No, you will not get a tax bill. I mean, this is not a personal distribution to you, so you're not going to be paying any taxes. And just like if you were to buy a stock and the value were to go down, or maybe the company were to go out of business, it would just be a loss to the IRA. It's the exact same thing with a loan. If you have someone that refuses to pay, the IRA would either need to sue them to recover the money. They would either need to, if it's a mortgage, the IRA would foreclose and then receive the property back into the IRA as the remediation for the settlement of the debt. So because this is not a personal distribution, if something were to go south, it would just be handled just like you would do it if you were personally doing the investment. Only difference is that your IRA is the one that would be pursuing all of the recourse in that instance. Someone said that they could not yet. Can anyone else have any issue hearing me? Okay, great. Looks like maybe someone just dropped the call, they said. Okay. With that said, I'd like to kind of open up. Keith asks, is that something you handle or do I? That would be something that you would work with your account manager on. So you would contact your account manager if you were having issues with it and review the process with them. If there is any sort of legal documentation that needs to be filed or something that needs to be signed on behalf of the IRA, we would need to be signing it. So you would just need to work with them. You can certainly contact the person that you're having issues with to try to get it worked out, and then contact us and we can certainly help you out with that. But we would need to ultimately be signing anything that legally needs to be signed in order to, file suit or file a foreclosure. And it's something, it's unfortunate as it is, I've had to do for several clients that have done those kind of things. Okay, great. And for anyone that would potentially be having issues with audio, this is being recorded. So just as an FYI, you will get recordings of this if you just go to our YouTube channel, or I can be happy to send it to you as well. Let me just pop my contact info up there. And please, great time to ask questions. We have one from Karen. If you use your IRA for rental property, who manages the rental process? Finding renters, fixing problems with the property. Is it me? The question is kind of two parts of an answer. So you are the one that's going to go out and find your tenant, qualify them, whatever you need to do to figure out that you want to rent the property to them is done by you. Fixing problems with the property. You are certainly able to coordinate and find and get whomever out there needs to be out there fixing the problem with the property, but you are not able to essentially swing the hammer. If there is anything that needs to be done as far as like fixing a toilet, replacing a front door, landscaping, things like that, you cannot, as the account holder, levy those services to the account. It has to be done by a third party. It doesn't have to necessarily be anyone that's licensed and insured. You can use a handyman or your neighbor or anyone else that you'd like to. Just keep in mind that it cannot be someone that is a lineal descendant or ascendant from you personally. So it can't be your mother, father, son, daughter, or your spouse cannot be the one doing the work for the property. So with that in mind, just find whomever you'd like, and then you can coordinate that. If there is an expense that needs to be paid, you just send us the invoice, and then we pay them directly. So long as that we get the invoice before 12 o'clock on a given day, the payment goes out the same day. Or if you're local to the St. Pete, Tampa, Clearwater area, they can just come by our office, and we can directly hand them the check as well. So good question, Karen. I do see that Keith and Constance have their hands raised in the pool of people attending this. Everyone is on mute, so if you do have a question, please do type it in. I'm happy to hang out and answer questions for anyone that has them. So please just go ahead and type them in, and we will certainly get them answered. Karen also asked, can you pay a rental management company to do the work for the rentals? Absolutely. We have clients that utilize management companies to kind of make it easier and streamlined. The rental agreement, the management agreement just needs to be in the name of the IRA. We sign the agreement. They qualify the tenants, get them in there, collect the rents, and then distribute back to the IRA. Certainly is not a problem. And if anything, it does kind of help alleviate some of the stresses of not being able to do the work yourself by having a third-party management company stand in. And we're members of the National Association of Rural Property Managers, NARPM, just to try to help bring that kind of service to our clients and give a good book of business. Corey asked, do you still have an office in Atlanta? Absolutely. We have an office in Atlanta. We just hired another associate up there, so the office in Atlanta is still certainly there, right over there in Buckhead. My colleagues Mike Bell and Mike Ventry are out there doing outreach and education. So if you are in the Atlanta area, stop by and see them, or they do go to all the different Atlanta real estate investor groups and hold different events at our office as well. Certainly. Okay, Scott asked, if you are flipping, you cannot do the work yourself. Do I understand that correctly? Yes, if you are doing a flip, you cannot swing a hammer. So you would have to coordinate, with any sort of general contractors or anyone else doing the work. So if you have a network of people that have done work for you in the past, or that you've worked with personally outside of it, use those connections in that network to help get your IRA running smoothly. If you are looking to do a flip, because you are not going to be able to do that work yourself, but you can't get any sort of personal benefit to your IRA or from your IRA. So by extension of you doing the work personally, you're not paying someone. It's a direct personal benefit and is considered a conflict of interest with the IRS regulations on IRAs. Cheryl asked, can a real estate agent use Roth IRAs for their personal gain, i.e. buying, renting, and flipping properties? The question as it's asked, no, but essentially here's how it would work. So if you're a real estate agent, you can certainly use your network of leads and contacts to help cherry pick the good property for your Roth IRA. The Roth IRA could potentially buy it. You could help facilitate and find the buyer and everything. You could not take a commission for the purchase as a buyer's agent. Conversely, you also could not do the work or anything else like that on the property. The property is an investment of the IRA. The IRA is going to be separate from you. Although you do own it, it's not necessarily a personal gain. So anything you're doing with the property, you cannot directly personally benefit from. So things like commissions or doing the work yourself, that's where the lines are drawn. But you can certainly use your expertise and network as a real estate professional to help find that good deal for your IRA to be involved in. A Roth IRA, simple SEP, 401k, what have you, doesn't necessarily define itself by the type of IRA it is, just the fact that you have an IRA, the rules all apply the same to them. All right, we got a question from Evelyn. On the same topic, I am a real estate agent and have a 401k. I can invest in flipping homes with my 401k, just to confirm. The answer to that is not as simple as answering over this. Evelyn, if you want to give me a call a little bit later on today, we can kind of jump into that. It's without asking a lot of questions regarding the actual 401k, it's hard for me to answer, but in basic terms, It depends. So if you have access to your 401k, if it's an individual 401k that you have established as a real estate agent, which a lot of real estate agents are independent contractors, they're self-employed, they're sole proprietors, um, you can certainly utilize that 401k if it is directly under your purview, if it's your own 401k plan. If you're currently employed by a company that offers the 401k plan, there might be restrictions on being able to move that money while you're still employed. So without, kind of knowing a little bit more detail, it's kind of hard for me to give you an exact answer on that. But if you have access to the 401k, or if it's your own individual 401k as a sole proprietor or independent contractor, yeah, you can certainly utilize the money within that plan, tax qualified either in a 401k with Advanta or roll it directly into an IRA without any tax consequences or penalties to flip homes with that. Oh, absolutely. She says it is the individual IRA from a former employer. So yes, absolutely. You can take that money without any taxes and penalties, roll it right into an IRA and get invested in real estate. Or if you're currently a real estate agent and you're a sole proprietor, potentially even establishing an individual 401k to roll those old 401k funds into, and then having the high contribution limits that we covered way back in the beginning of this presentation as well. So there's a lot of different options out there for you, Evelyn, and feel free to use this as a resource and let us know how the best strategy that you want to utilize to get that money working for you. All right. I'll hang out for about another 5 minutes here on the presentation. Thank you everyone for attending. I hope everyone is having a great end of the year. Before people start signing off, one I just want to out there, if you are interested in an individual 401k, they do have to be established in this taxable year in order to make a contribution for this year. So if you're self-employed or an independent contractor or a sole proprietor and you're interested in doing an individual 401k and making contributions and getting deductions for this 2016 taxable year, you do have to establish that plan before the 31st. You have to adopt the plan. IRAs don't have that kind of deadline on them. You can establish an IRA next year and make a previous year contribution before your filing deadline. So just keep that in mind. If you are interested specifically in the 401k, it is something that does have a very short fuse with regards to being able to get that done and to accomplish something this year with it. But we are certainly putting those we always do as a priority at the end of the year. So give us a call if you are interested. There still is time to get 401ks open and funded for sole proprietors or single member LLCs, people owning subchapter S's or the like, to get those open to be able to fund and get deductions for this year. So that's the one thing I do want to put out there. If you are interested in doing an IRA or anything else like that, you do have a little bit more leeway. You don't necessarily have to rush and get anything done before the end of the year. So I'd just like to put that out there because, if you are interested, please do give us a call so we can get working on that for you as soon as possible. But that's pretty much it. Be here for a few more minutes. Again, this is recorded. It will be uploaded to our Learning Center for you as well. Scott asks, what are the limits of IRAs? If you are referring to contribution limits, the maximum amount you can take out of your pocket of your earned income, which is Schedule C of your 1040, and put into an IRA on an annual basis is $5,500. If you're under the age of 50 and a half, and if you are over the age of 50 and a half, it is $6,500. Keep in mind that that is just money that you are contributing out of your personal funds. That is not a limit on earnings or what you can move over from another IRA or old employer's 401k. That's strictly just the contribution limits. But if that is a question regarding what are the limits of IRAs with regards to investing, give me a call. We can certainly have that conversation. That conversation can go on for quite some time. So happy to have that if that wasn't the direct answer to your question. Cheryl asks, is $6,500 an annual limit? And that is yes. All right, since it looks like we're pretty much done with any questions. Oh, thank you, Karen. Yeah, anyone that has any questions, use me as a resource. Get on our website, use our Learning Center. We're not going to be doing any more events to the end of the year, so I hope everyone had a great 2016. I wish you a fantastic 2017. If there's anything that we can help you with to make sure it is a good and prosperous year for you, give us a call. We look forward to working with you. Past that, thank you very much for attending, and have a wonderful New Year's.